Hi everyone, let's cover my Elliott Wave scenarios on the 4-hour and weekly time frame on SUI, starting with the bullish scenario on a 4-hour time frame where we have a finished corrective structure to the downside, a low is in, and we look for impulsive bullish continuation to new all-time highs. This structure to the upside here is then going to be counted as an impulse. We have our wave 1, wave 2, wave 3, wave 4, and then wave 5. It is nice to see that wave 3 is really steep and we had an increased amount of volume. We want for wave 5 another high on preferably a lower amount of volume. Now these 5 waves to the upside are then going to be labeled as a bigger wave 1, after which we look for a wave 2 and then continuation to the upside. We have some resistance as well to the upside. As you can see, I am mainly interested in the red levels at 416, 441 and 468. That was also the support over here, by the way, at 174, the point of control. And I do really enjoy volume. So keep an eye on the levels here above price. That can definitely be this area over here, an area of interest to finish wave 5 and then start wave 2 to the downside, which then either retraces very shallow to the price action of this wave 4 or deep to the price action of this wave 2. If we toggle on the 886 locally taken from this high to this low, you can see it is not yet touched. But it is interesting to keep an eye on the 886 at 377.93 on my chart, the Coinbase chart here, because once the 886 is touched, it significantly increases probabilities to take out this high. Now, generally, after an 886 touch, you do still see a little bit of a retracement, but any move to the downside is going to be a buying opportunity, which of course is in line with this bullish scenario as well. Now, the bearish scenario is what you see here on my chart, which at the moment has lower probabilities because we do not have enough information. So first of all, this structure to the downside has to be counted as a diagonal to the downside, labeled then as your wave A. A diagonal here does work. Wave 5 shorter than 3, 3 shorter than 1, 4 shorter than wave 2, and it is a contracting diagonal. And then we have this structure to the upside. Now this then has to turn into a 3-wave structure because we need more downside, right? An ABC, for example, right? We have a 5, we need a 3, and we need another 5 to the downside, either ABC or 1, 2, 3. But by all means, B, or possibly a wave 2, needs to be a 3-wave corrective structure. Now, based on the local price action, you would then either look for a 1, 2, 3, 4, 5. That's your wave A. You're then going to be looking for wave B and then a wave C, but that is going to be the exact same price action as in the bullish scenario, but instead of a 3, you look for a C, but you're still looking for price to take out this high, which is a minimum target anyway, right? Alternatively, you have what I have on my chart over here, which then is A, B, C to the upside in a W. This is all going to be part of a bigger wave X, like you create a flat, for example, in an X, but then you still want to see another wave Y. So in other words, you then continue this range for a longer period of time. You're basically going sideways and then later move towards the downside. The reason why, preferably, even in a bearish scenario, you as a bare minimum continue sideways is also because of time. The vertical line on my chart is a fib time taken from the start to the end of A, and preferably wave B ends after the 382, which is the 11th of May. And at the moment, as you can see over here, price is not yet at the 11th of May, right? We're living on the 8th of May. So preferably you still correct for a longer period of time in either a W, X, and then a wave Y, or a wave A, 5, B, and then a wave C, a 5-wave structure. Now, at the moment, this is then also the reason why this has lower probabilities compared to the bullish scenario. We just don't have enough information. You're either going to get a 5, a 3, and then a wave 5, but that's the same price action as the bullish scenario as explained, or you're looking for a W, X, Y, but we still need more information and more patience to really give higher probabilities to this becoming and being a W, X, and then a wave Y. Now, if we then go to a weekly time frame, then I have 2 bullish scenarios. One is a diagonal here. So we have a 5, 3, 5, 3. Look for another 5. That is a leading diagonal. So this diagonal would then be a bigger wave 1. You look for a very big wave 2 and then continuation to the upside in a wave 3. in a future bull market. The invalidation for this scenario is if price is going to move to the downside without taking this high here and moves to this diagonal red line, which is currently sitting at about 114, but as you can see, as the weeks continue, the line slowly moves towards the upside, 118, 120, etc. Or you're going to move towards 113, which I think I might actually just remove this level here because the diagonal line is now moving above that other invalidation, so I don't need the horizontal line anymore. So this is going to be your invalidation, but in this case you have 5, 3, 5, 3, 5. Wave 2 and wave 4 have to be zigzag family structures in a diagonal, and your wave 5 has to be a 5-wave structure, 1, 2, 3, 4, 5, and then you get the retracement. Your other bullish scenario is a lot more bullish actually. That's a wave 1, 2, 1, 2 continuation to the upside. Shallow retracement here for your wave 2, but the 382 is a minimum target and it retraced to the wave 4 of a lower degree, which is this range over here, which is a fine target for a wave 2 anyway. Now in both of these bullish scenarios, you do expect this high to be taken, and it then is about the reaction. Right, in this scenario here, you're going to be looking maybe another wave 1 and wave 2 and then lift off, right? This move down has to be corrective. It's as simple as that, or you just continue towards the upside and you don't look back, right? Very big wave 3. And alternatively, you just have a 1, 2, 3, 4, 5, but you're going to create a bigger corrective structure to the downside, right? So in both cases, yeah, you're going to be looking for price to move up, but after you take the high, we got to take it step by step and probably come back to this chart to see what's up. The bearish scenario on a weekly time frame is a zigzag, after which you want to see a deeper retracement to the downside. Now, this is then also where locally my bearish scenario comes into play. But as explained, locally, we quite simply do not have the information to give this scenario the highest probabilities locally, which means that on a weekly time frame, we cannot give this scenario the highest probabilities. So concluding this video, on a lower time frame, the bullish scenario at the moment has a higher probability, 1, 2, 3, 4, 5. Keep your eye on the resistance levels over here to end a potential wave 1, look for a wave 2, and then continuation to the upside. Alternative bullish scenario, not worth covering because low probabilities is a 1, 2, 1, 2, and then lift off in a wave 3. Just be aware, not the highest probabilities though at the moment. On the number 2 spot here, bearish scenario, which is your diagonal 3-wave structure and a move down. You need a 3-wave correction. We don't have that yet, and we need a lot more information to give the bears higher probabilities basically. On a weekly time frame, the probabilities are related to what happens on the lower time frame. It all depends on what happens over here. So therefore, the probabilities are exactly the same as on the lower time frame. I hope that this video was helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.